You're listening to Indications by the Conference Board.
Hello everyone, my name is Derek Servais. I'm the Senior Digital Media and IT Specialist here at the Conference Board, and it's a pleasure to welcome you to today's edition of Indications Podcast, a series brought to you by the Conference Board. Today, I'll be sitting down with Senior Economist Ilaria Maselli to discuss the latest data on consumer confidence in Europe. Good morning, Ilaria.
Hello everybody.
The Conference Board, in conjunction with Nielsen, has formally launched our latest economic indicator. The Global Consumer Confidence Index takes the temperature of consumers in 64 markets around the world, including how, what, and where they intend to spend in the months ahead. In this episode, Ilaria and I are discussing the background of the index, the key findings for Q2 of 2019, and how business leaders can best leverage these quarterly numbers going forward. So Ilaria, good morning again. Thanks for joining me today. Could I ask you to start by giving us a quick overview of the results?
All right, Derek, I'm going to do my best, but quick overview is not an easy job because Europe as a region in this indicator counts 34 countries. So I'm going to start with the average. The index currently stands at 87, which means there's been an increase in Q2 compared to Q1 of 4 points.
So I guess the quick question really, and I guess it'll be on most folks' minds, is that good or is that bad?
Okay, good question. I'm going to first explain how the index works. A result higher than 100 means that the consumer in that country or in that region is rather on the positive side. Now, the funny thing we always observe in Europe is that on average confidence it's much lower among Europeans compared to people, for example, in Asia or North America, where it's well above 100. Europe also, we have to keep in mind in the geography of this index is a huge group which contains many different countries from Russia to Portugal.
So tell me, on average, 87, how does that compare to global figures?
So 87 is lower than the global figures because consumer confidence is currently 107 in Q2, and it went up compared to Q1 by 1 point. This is of course not a major change, but I think what matters at the global as well as at the European level, that these are historically high levels.
Okay, thanks Ilaria. So now that you've set the scene a little, can we delve into this a bit further? Can we perhaps look into some specific countries? What are the most interesting changes you see in the biggest Euro area countries, for example?
All right, I would then definitely start with Germany and France, where the index goes in opposite directions. So we observe first of all, we observe a big jump in France, and this is mostly driven by the perception among households that this is a good time to spend. Now, I should perhaps remind everybody that the index is made of 3 sub-indicators. One is how good is time to spend, the second one is personal finances, and the third one is the job prospects. So big jump in France, as I said, driven by the fact that it's a good time to spend. In Germany, it goes in the other direction. We see a small decline. Now, this is not alarming per se because consumer confidence can go up or down. There is some volatility in the index, of course. But I think we have to highlight it this quarter because it seems that the entire confidence in the economy is going down simultaneously among consumers and among businesses. The other country I would like to talk about is Italy. There are good news coming from Italy because consumer confidence has improved. And this could be a sign that the economy might be back on a modest but positive growth trajectory during this year after the small recession that happened at the end of 2018 and the beginning of 2019.
And how do you see that developing, Ilaria, this situation in Italy? Do you think this is sustainable? I mean, I know you've just mentioned that it's a modest growth trajectory, but personally, any thoughts?
It is a difficult case, I have to say. We don't expect growth to be strong in 2018, but we expect it to come back during the rest of the year on a positive track. And the results on consumer confidence in Q2 go a little bit in this direction.
Okay, well, it's really interesting to see the differences in these major Euro area countries. And I guess, like you said, it'll be worth keeping a close eye on developments in Italy. At this point in our program, we're going to take a short break for some quick announcements and be back in just a minute to continue discussing the latest insights on consumer confidence in Europe.
Looking for additional insights beyond this podcast? The Conference Board hosts an array of annual seminars and conferences on a wide selection of topics, ranging from engagement to strategic HR, talent management, leadership, and diversity and inclusion. learn best practices from top companies and hear insights from renowned practitioners and thought leaders, all while having the opportunity to network and collaborate with your peers. For a complete list of our upcoming programs, you can visit us at www.conferenceboard.org/events. And as an added thank you for listening to this program, use code POD300 to save $300 off your registration. That's POD 300. Seats fill up quickly, so visit our website and reserve your spot today.
So hello again and welcome back to our conversation with Ilaria Maselli on the newest data on consumer confidence in Europe. Ilaria, so far we've had an overview of the main figures, but perhaps now you could share with us some of the insights you have on what people are more likely to spend on.
I'm very happy to do that because there are some interesting questions in the survey beside the three main items that compose the index. So one of them is, after basic necessities, how are you going to spend the spare cash? And what we see this month is that there's been an increase in a couple of items. So consumers in the euro area are more likely to spend on new clothes and holidays and vacation, and also out-of-home entertainment. This is not entirely surprising because, of course, it's the holiday season and the sales are starting. So the figures actually make sense. There is also always, I have to say, it's quite constant, a number of consumers that declare that they're going to spend they're going to save actually and not spend the remaining cash. And this, as I said, it's quite constant over time. What they're going to spend less, and that's also interesting, it's these big ticket items like home improvement and decoration and tech products. So given the uncertainty in the economy and the outlook for the coming months, which is not as bright as 2018, this is something that businesses should keep in mind.
Interesting. I think as consumers, both of us will probably agree with all of those results and say that, it's a pretty accurate representation of where we stand at the minute. We spoke earlier in the program about the largest economies of the euro area. What can you tell us about the other countries? Are there any big changes?
I would say there are interesting cases outside euro area, and these are the UK and Turkey. So first of all, in Turkey, we observed a large increase in confidence. It went from 83 in Q1 to 100 in Q2. Households surveyed believe that their financial situation and their job prospects have improved a lot during this quarter. Now, we have to keep in mind that Turkey is a country we always speak about because it's extremely volatile. All indicators with Turkey are extremely volatile. Confidence declined massively in 2018, hand in hand with the political instability, and now it's improving again. And I can imagine it's not easy to do business with these large swings. Another country that is interesting this quarter is the UK because consumer confidence declined again, and it currently stands at 94, which means that there are more people with a negative outlook than people with a positive one. This is no surprise, given the race for the Conservative Party leadership and the new discussion on a no-deal Brexit on October 31st.
Yes, Ilaria, I think like you said, this last example really is no surprise. Given how the last 2 years have unfolded, and as you mentioned, Turkey remains volatile and a different country to do business in. So no surprises there as well, I guess. It will be interesting to look back again next year to see how this all develops, don't you think?
Yes, quarter by quarter, we're there.
If I may, Ilaria, now, I'd like to ask you one last question. What do you believe are the biggest concerns for Europeans in the coming months?
Every quarter, there is one question in the survey that I like a lot. So it says exactly what are your biggest concerns over the next 6 months. And if you look at the data over a long time, you can see that there are three items that rank always very high, and fair enough, it's health, it's the economy and job security. But there is a couple of items that went up for several quarters, and this might be of interest for businesses. So I'm happy to share these results. The first one is among euro area consumers is the increase in utility bills. So 8% of households this quarter declared that being their top one concern. Another one is global warming. The share of euro area households that rank number one went from 2% in 2016 to 7% today. So that's quite a rapid jump.
Surprise, yeah.
And then the other one that is interesting is in the UK, where the concern over political stability skyrocketed. It was the top concern for only 1% of households before the Brexit referendum, and now it's all the way up to 10%.
Again, no real surprise there, I guess.
Unfortunately not.
Well, Ilaria, thank you so much. Unfortunately, that's all we have time for today. I want to thank all of you for joining us, and a big thank you again to you, Ilaria, for sharing the latest insights on consumer confidence in Europe. I hope you enjoyed our podcast today, and if you'd like to find out more, please visit our website at tcb.org/data if you're after more economic insights, and tcb.org/podcasts or /webcasts for more of our interactive programs. So thanks again, and goodbye.
This has been Indications from the Conference Board.